Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In this video I'd like to look at an advanced technique that more experienced MTPredictor traders can use to identify additional trade setups that can help you trade in and around setups that have actually failed. What do I mean by this? Well, if we look at this 3-minute chart on the YM, you can see that yesterday we had a standard MTPredictor setup here. You'd have actually been on the bar before this one because this was a double bottom and there was a history triangle there, so I'll put that on, and there's that setup there into the high, no problems at all, a plus 4.5 hour profit. But we also had a setup here. If I put the analysis on, you can see that it would have actually come in here, taking you into a trade and then being stopped out for a -1 hour loss. Now that's okay because we know that losses can and do unfold, and the trick is keeping these losses small. However, could the advanced trader then have taken account of something else as the market continued lower? Well, this is what this video is going to be about. For this we need to understand and know what an ABC pattern represents. And this is what the TS3 setup here is identifying. It's an ABC pattern that's reversing, in this particular case, at the typical wave 3 WPT. And that's important. It's not the minimum, because markets can, or an ABC pattern can go down to the typical. It's the typical wave C WPT we're interested in, because this is the most likely area where a wave C can actually unfold. If I just scroll in a bit like this to here, zoom in a bit. There we go. Makes it a little bit easier. So the idea being is that most ABC patterns will actually unfold or go to the typical wave CWPT. So the question I ask is, what happens if the typical wave CWPT is exceeded? Well, as we can see here, the market then tends to reverse and continue down in the opposite direction in this case, or continue in the original direction. In other words, the wave C tends to turn into a wave 3 as the market continues. So the question being is, can an advanced trader among you take advantage of that? Well, yes, you can. In other words, what I'm suggesting is if we have a good idea of the larger degree trend, and I'll look at that in a moment, and the larger degree trend is suggesting that this setup is going to fail, then we can look to take a trend continuation trade, as I call it, in the opposite direction. So the first thing to do, or the next thing to do I should say, is to have a look at the larger degree trend. So for this I'll just zoom in, or say zoom out a bit, and have a look at the 15-minute chart. So I'll just swap this to the 15-minute chart, and that's just loading now. Zoom in a bit, and if I take a DP off this prior high, you can see that the market here was actually at 15 minutes DP resistance. So in other words, as the market was going down, odds on it was against, or the larger degree trend was down. So the TS3 buy setup we had on the 3-minute chart was against this 15-minute trend. I'll just put this DP on from down here because this was a sort of the last major pivot down there, because I'll use that for a target in a minute. So if we go back to the 3-minute chart, this should become more obvious. Right. So here's what I'm looking at. So here we are with our TS3 buy setup here. But can you see how this buy setup is now against the larger degree 15-minute downtrend? So first of all, the advanced traders among you should have had no surprise at all that this TS3 setup failed, because it was against the larger degree downtrend, and that's because we were coming off this 15-minute resistance here, that now the high of the day. So the question being is, can we now do a trade in the opposite direction? Well, yes, we can, and it's all about having trades that are basically small controlled risk with good targets. So what I'm suggesting on this is, if we were looking to sell below the low of that bar, we had our stop just above the wiggle here, in other words just that small little crest high there. Our initial target could be down here roughly at this larger degree 15-minute low. That's why I left that 15-minute target on there, because that could give you an initial target. So can you see how in this particular example we've set up a small or a trade that carries a small controlled risk to take advantage of, if this TS3 buy setup fails, to take advantage as the market then carries on down in the original direction. And if I scroll forward, you can see that's indeed exactly what happened as the market went down here and actually made a low just beyond that. But the point being is it actually reached this target initially. So this is the setup I'm suggesting, is that this is for the advanced traders among you, is that if you get a ABC pattern, i.e. in and around an automatic setup that's unfolding at the typical wave C, that's important, typical, not the minimum, and again this is the important point as well, that the 15-minute trend was suggesting that the original setup was going to fail. In other words, the original setup, in this case a buy, was against the larger degree downtrend, and you get a little wiggle like this where you can place some initial stops, then you can place a trade, in this case a stop and reverse, to take advantage as the market continues in the original direction. And in this case you'd have lost minus 1R here, but you'd have quickly made up plus 5.4R there. So that's a good trade setup for advanced traders among you, and it's a good one to do because it allows you to make profits around MTPredictor automatic trade setups that fail. But the key points, just to recap here, the key points are that the new trade must be in the direction of the larger degree trend, and the failure must be in and around the typical wave CWPT. So if you meet those two criteria, then this is a lovely trade setup that can take advantage of the trend continuation as an MTPredictor trade setup fails. So that's a good one for the advanced traders among you.